Very good morning, guys. This is the Tanmay Edge. You are listening to episode 49. I am Tanmay Kurtagoti. Let's go. Wednesday at close, the Sensex was down 142 points. The headline said red. Nifty closed at 23,908, basically flat. Most people who looked at the index and walked away thought the market did nothing. The markets did a lot of things here. On Wednesday, the BSE Power Index closed up 3.27%. That's a sectorial index doing 3.27%. Capital goods closed 3.2%. Metal closed up 1.75%. And here is the line you have to hold in your head for the rest of this episode. Three of those sectorial index, power, capital goods and metals, all touched their 52-week highs during the day. 3 on the same Wednesday, the Sensex closed in the red. The headline hit the chart, but actually Sensex did something amazing. So how does a market with 3 sectorial 52-week highs close down 142 points on that day? 2 letters, HDFCBANK, down 2.63% on Wednesday. That one stock, given its weight in the Sensex, ate almost 260 index points by itself. Strip HDFCBANK out and the Sensex was up on Wednesday actually. The drag was idiosyncratic. The breath underneath was something else entirely. Now let me get to Wednesday's close details because today's plan depends on them. Nifty closed at 23,908, down almost 7 points. The intraday high was 23,984. The intraday low was 23,858. A range of just 125 points on a 23,900 ATM index is a calm move. The advance decline on Nifty 50 was also quite positive, 68%. That is 34 advances to 16 declines. Sensex closed at 75,868, down 142 points, with HDFCBANK doing the damage. Bank Nifty cash closed at 54,854, down 0.43%, also dragged by private banks. The two most important numbers from Wednesday are not on the index. India VIX closed at 15.24, down 5.5% on the same day. Some prints had it at low as 14.98 during the day. Either way, that is a sub 15 print, and that is a regime change from where we were on last week and last month as well. The market is pricing calm. The cost of insurance has just collapsed a lot. And number two, the domestic institutions bought 3,821 crores on Wednesday. And the FIS sold almost 1,042 crores in cash. So domestic absorbed foreign at a ratio of 3.66 to 1. When that ratio runs above 3, in the past episodes, it has been a buyer conviction signal that runs for 1 or 2 weeks. Keep that in mind now. Now here is where it gets interesting, and I want you to slow down with me for the next minute. The NSE participant report for Wednesday shows 3 different people betting in 3 different ways on the same market. The retail crowd, what the report calls it as clients, sat at the close with net long of 1,37,000 index futures contract, and they had written almost 7 lakh net puts. They sold the floor. They are bullish and they are confident and they are pocketing the premium as the markets are oscillating. The professional desk, the proprietary book, were almost flat on futures, minus 8810, but they bought both legs of options. On the option side, they went long gamma. They are now net long 96,000 calls and net long 2,35,000 puts. They are paying to own movement in either direction with slightly heavier hand on the downside. They are not bearish. They are buying the cheapness of the insurance because the insurance has just gotten extremely cheap. The FIs did something entirely different. They closed Wednesdays with net short of 1,63,000 index futures. They added to that short. They wrote 2 lakh calls as well. So they are betting on a ceiling. That is, the market is not going to go higher. And they bought 4,37,000 puts, the biggest single position on that whole board. The FIs is a position bearish, cleanly bearish. Future short clients sold down, downside bought, but that is not the actual position. On the cash, they have a huge long built up, which we are going to cover in the coming episodes as well. So 3 people, 3 bets, 1 market. The chart underneath all 3 is breaking out. 3 sectorial 52-week highs on Wednesday. India's 10-year bond yield trading at 6.98, the first sub 7 point of this cycle we are seeing. telling you that bond market is pricing rate cuts and duration buyers are showing up. Brent crude at $92.12 and WTI at 88, both staying below 100. So no oil panic from any geopolitical headlines. And the US closed yesterday at fresh record highs on S&P at 7563 and Nasdaq at 26917. And Asia this morning, Nikkei is up by 1.83%, Kospi is up by 2.47%, Taiwan is up by 2.13%, even Hang Seng slipped into green by 0.4% after a red Thursday, and GIFT Nifty is barely changed at 23,889, up 0.07, flat, no shock opening after the sell-off that we saw on yesterday, but thankfully we were closed yesterday. So the setup going into Friday, that is today, is the tape is bullish, the retail crowd is bullish, the professional desk is positioned for movement either way, and the foreign desk is leaning short into all of it. And here is what I am going to do today. I am buying the dip. If we open flat to mildly red and the market gives me anything around that 23,850 to 870 mark or below, I am a buyer. The magnet in the option chain stands at 23,900. The cushion just below that where the puts have been selling. So runs from almost 23,700 to 23,800. Both these strikes, the puts are returned heavily. The first real obstacle on the upside is 24,000, where call writers have stacked the heaviest OI of the entire chain. My base case is that we touch 24,000 today. My higher case is that, and given the way the foreign shorts look like and the way domestic is absorbing, my higher case is that we breach 24,000 on the upside today. If we breach it with volumes and we see the call writers covering their shorts, the next zone of resistance directly goes towards 24,200. That is where I expect the markets to start consolidating. Now the second part of the plan, I am not carrying any short options into Friday's close. I am not selling options overnight and carrying them over the weekend, and I am long volatility over the weekend. The cost of insurance is at 15% on the VIX. This is cheap by the standards in this cycle. The professional desks is buying both legs, and they have a reason. There is a US holiday weekend coming up. There are headline risks that the market is not pricing right now. Buying insurance when it is cheap is what professionals do. If nothing happens, the premium decays. If something happens, the protection pays. I would rather pay 15 cents to ensure that carry a short premium book through the Saturday and Sunday. Quick sectorial overview, guys. Power, capital goods and metals led Wednesday with 352-week high touches, and auto closed up 1.45% with 93% of the constituents advancing, the strongest breadth in the entire sectorial pack. Pharma, PSU, energy and infrastructure all came in green. The drag was the defensives on Wednesday, FMCG, IT and private banks. Buy the breadth leaders, do not buy the laggards just because they look cheap. Last episode I called 5 things, 4 hit cleanly. The Sensex closed in the band. The Sensex intraday low was way above 75,330. The VIX closed below 16.5 by a huge margin, and the auto sector positive on that day. The only miss was the strict band miss by 32 points on Sensex and the settlement call. 80% of episode 48 predictions set and locked in, and you can track it live on rupeecase.com as well. That was the Tanmay Edge for Friday, guys. The story today was 3 players, 3 bets, 1 market. The trade for today is buy the dip and look for 24,000 on the upside. The carry today is do not hold short options position into Friday's close. Buy your protection while it is cheap. So guys, I am Tanmay Kurtagoti, and if this helped you, share it with one trader friend who needs it right now and reading the headline numbers with you. Subscribe on Apple Podcast or Spotify so episode 50 lands on Monday morning. You can also stream the episode and every other episode on rupeecase.com as well. Head into the podcast section, and if you have a second, then rate the show on the podcast app so the next trader who is searching for this can actually find it, and it will help the podcast as well. So thank you guys, and see you once again on Monday. Have a very happy trading on Friday and a great weekend ahead.